Good afternoon, everyone. A very warm welcome to our viewers joining us from across Africa and beyond. You're watching this special pre-event webinar under the banner of the 9th Africa Agri Expo, which is happening on 11th and 12th of February at the Kenyatta International Convention Center, situated in Nairobi, Kenya. Today, we are diving into a very exciting theme, which is called Agri-Fintech and Digital Mechanization, Scaling Africa's Farm Productivity in Today's World. With the discussion, we'll be unpacking how financial technology and digital mechanization are transforming African agriculture, making it smarter, more inclusive, and future ready. From affordable mechanization for smallholders to innovative financing models and public private partnerships, we have a lot to explore today. So, you're just entering a good discussion. We are joined by an amazing panel of experts who bring a wealth of experience from across the agri finance and technology ecosystem. We have Mr. Christopher Kiburu, who's Chief Credit Officer at Agriculture Finance Corporation. Welcome to the session, Christopher. Then we have Mr. Abdu Nasser Kalia Bulo, who's National Training Manager at Sun Culture. Hello, Abdu. Moving forward, we have Mr. Nelson Luta, who's Senior Business Development Manager at Masunga. Then we have Mr. Pedro Silva, who's Chief Financial Officer. And finally, we have Mr. Emeka Nwachinimere, who's founder at Kitohu Technology. Thank you all for being here today. It's truly a pleasure to have you all. Nelson, let's start the discussion with you. You have been closely involved in advancing digital mechanization solutions across African markets. From your experience, how can these solutions be scaled in smallholder dominated farming landscapes while still remaining affordable for farmers? You're on mute.
Thanks for the introduction, and great to be here with everyone. Like I said, my name is Nelson from Masunga. Masunga is a fintech and engineering company with two products. One of them called PayGops, which supports companies looking at the last mile to manage their field operations and lending operations. And the second one is called Bridging, which connects these distributors and companies to capital. Now, in our experience, we've been around for more than 10 years, working with companies such as Wanika Fund, Shamba Kijiji, who I've seen represented in this call, to help them reach out to farmers working at the last mile. Now, in terms of mechanization, especially for smallholder farmers, the one point that's impossible to miss is the affordability. No solution can be provided to smallholder farmers without addressing the affordability conversation. And as well, there's existing labor within smallholder communities. So the models we're seeing that need to be utilized are pay-per-use, where the farmers can be able to pay incrementally as they need the solution, but also in a way that they can be able to afford the solution. That way, there's a direct correlation between the value they're able to generate between the mechanization tools, whether it's tractors or tools that they use on their lands, directly to the effort being put on the lands and the output that comes from the produce. Another key thing with smallholder farmers across the continent is trust. For most of them, this is their livelihood. There are no other formal employment. So if they don't succeed with the produce that they have, they are done for livelihood for that whole year. Therefore, any solution provided to them has to have a level of trust in that it will help them succeed, and also a scale and distribution. One thing that we're seeing being able to optimize this is working with these farmers in groups and cooperatives. Across the continent, there's a lot of small farmer organized cooperatives, and being able to distribute mechanization products through these cooperatives allows to build that trust and also to manage distribution. The other point that I think I'll add would be also building local assembly. So the other big problem with mechanization, once you have a tool that's down and you need to fix it, if you don't have in-ground, in-location, the capacity to do this, then it becomes too expensive for you to manage it. And usually this costs are passed down to the farmers who already cannot afford the solution. So when you have to inbuild the support to be able to offer these after sales for the solution that you provide to be able to do this. Lastly, I'll say bundling with other solutions. Now, the challenges that face smallholder farmers and farming in general, the main ones would be agricultural input and access to quality input. The other one is climate change, which we see all across the continent and in the world. And then all of this tied up with affordability. For you to be able to offer mechanization solutions by themselves without addressing the access to quality inputs and without addressing the climate challenges that the farmers are facing becomes quite pointless, because at the end, they won't be able to succeed and they're not able to afford these solutions. So top down, that's what I'll highlight. And maybe I can summarize with, I think the average age of the smallholder farmers in Africa is around 50 years old. Mechanization and tools will help them get productive, but how do we support them to afford this solution is something we can think about further. Thank you.
Very well. I think very clearly explained, Nelson, and that's an insightful start to the discussion. We strongly also believe throughout our experience with Africa Agri Expo that affordability and scalability really go hand in hand in Africa's context when we discuss agriculture. Now, Apu, let's bring you in here in this discussion. Sun Culture has been pioneering solar powered irrigation solutions for a while now. How do you see Agri-Fintech bridging the gap to make technologies like solar irrigation accessible to farmers with limited capital?
Right. Kindly confirm. Can you hear me very well?
Yes, I can hear you very well.
Okay. So to start with, I think it's important for us to understand the challenge at hand. And when you look at the challenge, we have a huge chunk of farmers that actually have huge potential and ambition in line with contributing to food production. But they are facing a challenge of limited capital. And not just that, they are also facing another challenge of being boycotted by the traditional banking systems and microfinancing systems. Firstly, these are farmers that do not have, number one, they don't have collaterals. Their income is very, very limited. And lastly, they also, when you do a bit of credit verification, their credit worthiness is extremely limited. And I think it's at this point that me, from the experience, working at Sun Culture Uganda, is where agri-fintech like comes in when it comes to bridging that gap. Firstly, our farmers have the opportunity to access technology without making big advance payments. And that has come into place simply because of agri-fintech. And at Sun Culture Uganda, through experience, using systems like pay as you grow, whereby a farmer has the ability to access a system, use the system, and at the same time make payments has been, I think, a very, very pivotal point when it comes to bridging that gap. And not just that, but there are also other simplicities that have come into play as a result of agri-fintech, like the use of the mobile wallets. So mobile wallets, from the Ugandan perspective, that's what we call mobile money. Or in Kenya, that's what they call Mo Pesa or something like that in different countries. But the fact that we have such systems into play as a result of agri-fintech make it a bit easier for our farmers to access technology, because remember, most of these smallholder farmers are remotely stationed. That means that they are deep down there in the villages. And if you tell them that the payment process for them to access the system is going to take them traveling to a traditional bank, it's costly, time consuming. But the existence of systems like the use of the mobile wallet payments through the USSD codes has made it very easy for actually our farmers to access technology. All the farmer has to do is to go to the USSD code and make a direct payment from their mobile wallet, and then they will be able to access the system. So I think that would be it from my end.
Very well. I
Unless
think
if
excellent points made by you, Abdu. And obviously, access to finance is really the bridge between innovation and impact when it comes to agriculture. And therefore, today we also have Pedro. Pedro, as I mentioned, is from Beyond Farming. And Pedro, we really want to get into the financial perspective here. From a financial management standpoint, what innovative financing models can make digital mechanization sustainable in the African agriculture context? And how can it be attractive for both investors as well as farmers?
Hi, I hope all of you are well. So my name is Pedro Silva, and as you mentioned, Tanya, I'm the CFO of Beyond Farming, and I have a footprint basically across several industries: pharma, cement, building materials, FMCG, and so on. I'm also chartered accountant, master in economics, and certified in data science by MIT, and certified ESG analyst. Now, answering to your question. To answer your question, we must keep in mind that this decade is when we see the real start of the so-called fourth industrial revolution, which means that now we have mechanisms available that are now available and allowing that it is now possible, effective, and as well interesting to use certain mechanisms by using and put those mechanisms available to the farmers in Africa, by using and as well by using some financial instruments like carbon market and like green bonds. Now, this is possible because artificial intelligence to blockchain, this kind of technology allows a whole set of new instruments like smart contracts, like cryptocurrencies, and all this together represents, in fact, an opportunity for Africa to retain a biggest portion of the overall value chain in the global economy. To answer to your question in a clear way, and before I give some examples of mechanisms like that, I will say that it's important to understand why they must be sustainable, right? And this is not about philanthropy, right? I recall a message from Mr. Mihir Gore from IBM, who said a couple of years ago that interesting sentence, which is sustainability is going to be the biggest thing since the Apollo mission. And I think this is a very interesting sentence because it's not about philanthropy. This is about actually bring economic rationale in a new way to the value chain, including to agricultures, to farmers, I'm sorry. But this depends on the sustainability strategy that must be followed by the companies, and also depends on the support that governments give to the policy that they follow, putting three things together, three pillars: sustainability, meaning ESG, finance, and as well the digitalization, blockchain, artificial intelligence, IoT, machine learning, and so on. If we do this, we can offer these mechanisms. Which mechanisms are we talking about? We can, based on these technologies, we can put in place mechanisms like, for example, digital leasing, which are offered by putting together the skills of some fintech companies as well from banking, allowing the farmers, the small farmers, because in Africa you have a lot of small players. It's a very fragmented landscape, right? So the instruments like digital leasing or pay as if you go, these are the kind of instruments that allow the farmers, even the smaller ones, to actually start mechanizing, having machinery at their disposal, not paying the full amount or having a more feasible way to make payments across time, because they will be only requested to pay a portion of the value depending on the number of hours that they are using it, by using technologies to make the follow-up of that and mitigating the risks of who are giving the credit, and at the same time allowing transparency on the whole process. Crowdfunding is also another mechanism that is interesting, because nowadays you have several platforms that online platforms that actually allows both transparency as well as traceability, building trust between investors or the finance institutions, and as well the farmers who will benefit ultimately with that kind of financing. And if we do all this together with IoT, artificial intelligence, blockchain, we can put together things that will mitigate the risks and therefore reducing the cost of the financing by creating, and this is available to the different fintechs, creating insurances for farmers, for example, who can be more cheaper if the farmers can cooperate with fintechs who have technology, satellite technology that allows to follow up what is actually happening on the field, which means that by using artificial intelligence and analyzing satellite images, for example, or blockchain to evaluate how the machinery is being used. This will allow the reducing of the risks and will improve the way the instruments that I mentioned before, the digital leasing, the pay as if you go, or the crowdfunding, to be more effective. So this kind of mechanisms are now available due to all these technologies, but it's important, very important, to don't forget the role that the African governments must have on this regard. It's on the hand of the African governments to retain in Africa a biggest portion, like I said before, the biggest portion of the overall supply value chain of the world. Because let's not forget that if the governments in Africa create in Africa things like taxonomies, environmental taxonomies, that will create trust, like it is happening in the other parts of the world outside Africa, to improve the contribution of the carbon market, as well as the contribution of the feasibility to use instruments like green bonds to help financing the farmers' business. And this is something that is not only theoretical, even for a fragmented landscape like Africa, because if you look at what is happening outside Africa, across the world, we see that multinationals who are purchasing products from Africa, right, and that historically leave in Africa a smaller portion of that value added, right, those multinationals, many of them are now very concerned, are now taking public commitments regarding ESG. For example, with the platform SBTI, Science-Based Targets Initiative, and those multinationals are also audited by using, for example, now since the last 2 years approximately, we have new IFRS S, so new accounting rules in the market, in the frameworks used by multinationals that are now being audited as well, which means that for all these reasons, both from the commitments like SBTI, based on an SBTI, Science-Based Targets Initiative platforms, as well as from the side of the compliance with the rules like IFRS S, for all these reasons, multinationals give value to the supply chain that they are using, including the farmers in Africa, which means that if these farmers, supported by the taxonomies that can be created by the governments, African governments, if they improve by using a proper sustainability strategy, they improve the ESG profile that they have, they will be able to negotiate better with the multinationals and keep with them, with those farmers, the biggest portion of the value of the global value chain.
Right. Thank you. Very interesting points, Christopher. And we completely also, Pedro, sorry, we also agree that sustainable from a financial lens is often overlooked, but it is a very key point to long-term adoption. And your points were very interesting in order to understand that how the trajectory is being formed. Moving forward, Christopher, that brings us directly to your domain. The Agriculture Finance Corporation has been instrumental in driving agri-credit in Kenya. So how is AFC structuring credit solutions to enable smallholder farmers to access digital mechanization technologies?
Thank you very much, Tanya. I think it is such a coincidence because we are speaking of farmers, and right away as I speak here, I'm visiting some of our smallholder farmers through a project called Rural Kenya Financial Inclusion, financed by both the government and eFund. And therefore, I think we are trying to talk to real issues that affect some of the key agricultural players in the country. So allow me to introduce myself. My name is Christopher Kiburu. I work for an institution called Agricultural Finance Corporation. And this is an institution that is mandated by Constitution to help farmers across all value chains in terms of giving farmers loans. So very quickly, I'll move to what the AFC does to impact smallholder farmers. Number one, I would say that the corporation's aspiration is to drive sustainability or sustainable agri-food systems through what we call collaborative and participative interventions. That means we give both funds to farmers and also we give what we call technical assistance to our farmers. Number two, AFC plays a catalyst role in enhancing credit accessibility, and therefore we play a role in de-risking the environment so that other private investment can be utilized in the agricultural sector. The corporation has also developed responsive lending models and products that help to create inclusivity among the marginalized. The marginalized here refers to youth, refers to PWDs, and also refers to Anglo MSME, that is rural-based micro MSMEs that really have got a lot of limitation in terms of credit accessibility. Tanya, when you look at those three key issues that I've mentioned, you realize priority to what we call agri-tech and also fintechs. Further, if you look at the Kenyan's agricultural sector, you realize that, and I agree very well with Abdul when he mentioned that the smallholder farmers or the rural-based agricultural activities have really been ignored by the other financial players, and these financial players includes the commercial banks, microfinance institutions that really forget that agriculture is very key. When you move to a bank to get a credit facility as a smallholder farmer, one thing the credit officer will do is that he will profile you as a very risky investment, forgetting in the morning they ate either a samosa, they ate a sausage, and that sausage must have come from some agricultural activity somewhere. And therefore, what am I saying? I'm saying it is important that we carry along even the smallholder farmers, so that as we try to help the success of this productivity, then again, as financial institutions, you are also playing a very key role. So AFC is doing quite a lot, very innovative ways of ensuring that we get to those farmers. And one of the activities that the corporation has given a priority is what we call wholesale lending. When I talk of wholesale lending, I mean that AFC gives loan facilities to SACCOs, gives loan facilities to microfinance institutions, and that money is used for on lending to smallholder farmers. So the key output here is that the money we give to SACCOs, the money we give to MFIs, that money is utilized to offer credit services to smallholder farmers, and it has really created quite a lot of impact. Because when you go to PFIs, that is SACCO and MFIs, they don't need that structured kind of collateral for them to lend to these smallholder farmers. Number two, we have what we call warehouse receipt system. And this actually has really helped to even address the issue of post-harvest losses. And this is where the customer is able to keep his product in a certified warehouse. He is given a receipt, and using that particular receipt, he can borrow from AFC and is able to get money to address any immediate financial needs. The corporation is also partnering with other fintech and agtech to ensure that we provide digital products to our customers, especially the youth. We've partnered with DigiFarm here in Kenya, and what we do to address the issue of diversion of process of the loan is that the customer applies the loan using the mobile app, and once they apply that particular facility, then they are able to get approval and they are able to pick input. Input here means the fertilizers, the seeds, and all those other small needs that they need to go and do the agricultural activities. We also have something we call anchor client model. And here anchor client model is where we give a bigger distributor, an aggregator, we give them money. And once we give them that money, they buy their input, and the farmers from various, smallholder farmers from various, across the country, various regions, are able to pick input, and once they go sell those inputs, or once they produce their agricultural productions and sell them, they're able to come back and pay the aggregator or the anchor clients. We also have partnerships, especially with the key government development partners. and also collaborations.
Right.
Here is where we partner with government development partner like say AFDB. They give us money and we're able to lend that money to our youth at zero interest rate or a very concessional interest rate. And out of that, we are able to impact the youth of this country. So those are some of the key approaches that the corporation has been using to ensure that the impact smallholder farmers. Thank you.
I think that's great to hear, Christopher, and especially the focus that you've made about inclusion of the youth as well as the smallholder farmers makes us believe in the role of AFC. And thank you for sharing those points. Emeka, turning to you now, Kitovu Technology has been doing incredible work using data-driven platforms to empower farmers. How do you envision the integration of, let's say, Agri-Fintech with digital advisory services to boost the kind of farm productivity that will bring a new scale?
All right. Good afternoon, everyone. Emeka here. Let me start by saying that I am very delighted to join this conversation. At Kitovu, our mission is to make Africa's food system work for smallholder farmers by basically building climate smart farming and post-harvest infrastructure that enables smallholder farmers grow, store, and sell smarter. In the context of our work, we've seen firsthand how data, finance, and digital tools can basically transform productivity when they are properly connected. Now, more to the question. The truth is that African farmers face a double barrier. They have limited access to actionable data and limited access to finance. These two issues reinforce each other. Now, the opportunity there is that as we progress and into the future, there is the possibility for integration where data drives finance and finance in turn enables the adoption of good practices. And so this is part of what we are doing with one of our products called Yield Max. So at Kitovu, through Yield Max, we basically gather data from soil, climate, and crop performance. That data not only powers our advisory, but also helps to build a credit profile for each farmer. Now, what this means is that lenders and partners can make data-driven financing decisions, and farmers can then get access to input, mechanization, or insurance linked to their real performance. So in terms of good agriculture practice, they have the right requisite knowledge and they have the kind of access to finance that helps them assess those. The result of that is basically what I would call a win-win loop. First, lenders are able to reduce risk. Farmers are able to boost productivity. And the system gains transparency through digital tools like blockchain and IoT. Going forward, we envisage that it's very, very important that we build ecosystems, not just isolated platforms. We enable open data sharing and partnerships that will basically create a seamless farmer journey from advisory to finance to market. When we loop all these things together, it will help transform how agriculture is practiced on the continent. And that's why it is very, very important that fintech or financing layers and digital advisory services are connected and linked together, because it will prepare farmers to make the best decisions and also assess the best in class inputs and services to achieve the best results. Thank you.
Thank you so much, Emeka. They were really fantastic points. And also, I probably believe in the notion that data-driven insights really are the new current currency of agriculture innovation everywhere across the globe, not just Africa. And Africa has been leading some new innovations really well. Now, Nelson, circling back to you, what role do strategic partnerships between agri-tech providers and governments, because we have been talking about both domains, play in accelerating mechanization adoption across the African continent?
Yeah, thanks again.
All
Well,
right.
I think she addressed it to me, Emeka. I'll have a stab at it, and you can also chime in. But yeah, governments basically create an enabling environment, and it's up to us tech providers to be able to put work in practice. I think, for example, across East Africa, there have been government subsidies targeting crop production, especially targeting towards fertilizer. And we've seen a lot of agri-tech companies being able to work towards still addressing the component of affordability. So while there's government subsidy targeting the same affordability, there's a distribution in allowing those farmers to be able to pay in installments on similar pay-go models or in similar facilities, allowing them to still be able to access those products, even though there's a government subsidy program that's affecting policy. Now, that policy conversation keeps on evolving. The better we can have a unified policy across countries, it will get better. But over time, it's something that we're seeing. So the fact that the governments are creating those enabling environments becomes a win. The other main part becomes on adoption and expansion. The more the government and tech companies work together, the more you're able to reach more companies and also reduce the risk of adoption. Reduce the risk of little adoption. So when farmers are more confident in the policies that governments provide, and they see all the companies working towards giving them important solutions, then it becomes easier to adopt solutions. Whether we're talking about inputs, whether we're talking about better mechanization, if there's policy from the government around there, then any provider who's providing the solution will be able to reach more farmers and scale up more. So this is something that we're seeing quite a lot in some of the markets that we are operating in. The other main thing would be around data-driven, and we're speaking a lot about data here. Governments can be able to catalyze data-driven and inclusive scaling. And one of the things that we've seen in markets such as Kenya, for example, with platforms being registered, so that you have a database of companies that are allowed to work with farmers, provide credit. This allows for more data-driven scaling from the farmers and for these particular customers with that trust being put with them. So those would be the main things that I see in terms of how those partnerships can be leveraged, tapping into all layers of government, whether it's national government up to the lowest form.
Right, absolutely. And collaboration between public and private players seems to be the real engine of growth here when we talk about smallholder farmer scaling. Now, Abdu, building on that, from a training and capacity building perspective, what are the key challenges in preparing farmers to adopt digital mechanization tools, and how is Sun Culture really addressing them on the ground today?
All right. Kindly confirm, can you guys hear me very well?
Yeah.
All right. Thank you so much, Tanya, for that question. And allow me backtrack a bit. I was very excited with the first question. Kind of went through. But to start with introducing myself, my name is Nasser Abdu, and I work with Sun Culture. At Sun Culture, our mission is to develop and commercialize life-changing technologies to solve the biggest daily challenges of the 570 million smallholder farming households. So now getting to the question that is in line with training, of course, the challenges are likely to cut across, and one of them being one of my fellow panelists had put across a statistic that mentioned that the average age of a smallholder farmer in Africa is likely to be, was it 50 years? I think that was Nelson who had put across that.
Yes, me.
All right. Okay, so when you look at that, one of the biggest challenges that we actually have faced is the low digital literacy. And of course, putting into the consideration that the average age is 50 years. Number one, their level to adapt to digital learning platforms is extremely low. And many of the systems that have been put in place, especially for learning management systems, you realize applications all through maybe web, all this seems to be new. So you're introducing an application that is completely new to the customer. The second challenge that we have also been able to encounter has been looking at the nature of Africa. We have quite a number of, like, the culture is wide and vast, where you have over 50, around 50 tribes that are domiciled in one area. So that means is that you're likely to go into a region and you realize that in one district, you have over 7 languages that are spoken across the region. So that brings us now to a challenge of language barrier. So most of the content that is designed in English, and how the challenge is now, how are you going to relay the same in the local languages? The other challenge would be the limited trust, especially when it comes to new technology. Again, that stems back to the average age. And you know that at 50%, they tend to have a bit of trust issues when it comes to technology. There's also a challenge of poor internet or power in some areas across, Africa and Uganda, to be specific. In some of the remote areas, and like I had mentioned earlier, that most of the farmers are remotely located. And in some of these places, just to access the internet is a huge problem. The other point I can hint on is the fact that farmers have busy schedules. And to get them into, let me say, a training spot can also be a challenge to a company that is intending to administer any training. Now, at Sun Culture Uganda, how have we been able to solve those challenges that have come across? Firstly, we have, number one, we conduct our trainings through local agents, and agents are regional based. That means an agent, I'll give an example. If the training is going to be conducted in Gulu, agents who will conduct that particular training will come from that same region. This helps us in a way that those same agents can relay the information because they speak that particular language. So that's one of the ways we've been able to address that challenge. The second way we've been able to address the challenges is engaging stakeholders. When I speak of stakeholders, you realize that there's a pattern, especially with farmers that are remotely based, or they tend to believe in their leaders. So what we do is that we have built a very strong partnerships with stakeholders like local council chairmen, local leaders, administrators on the local level. And as long as we can get them on board with the information, it is very easy for us to relay the information, knowing that we have the support of the local stakeholders. Thirdly, we also integrate, we also do a lot of integration, and also have a system where our engineers actually, before the installation of the systems, the engineers are always available in place prior to contact the customer and educate them on the system. But also, upon installation, engineers are available to do a bit of education and education support and information support when it comes to training our wonderful farmers. And lastly, we keep on improving the training materials based on the feedback and the data that we always get from our wonderful farmers. Thank you so much, Tanya.
Abdul, I think that's excellent, and I completely agree that building capacity is as important as building technology, and it is important to create such avenues for the farmers so that they can accelerate those advancements. Now, moving forward, Emeka, since you've scaled Kito's solutions across diverse markets, what are your key takeaways from that journey, particularly lessons that could help overcome financing and mechanization bottlenecks in the African agriculture?
All right. Thank you very much. So here are some key lessons from our experience. The first one is around data-driven credit design. So one thing that we've seen and learned is that farmers' data can be a sort of collateral, especially when you consider that most farmers um, don't have a lot of um, financial information or physical collateral. So it then becomes important to leverage data as a tool for an alternative credit collateral design. It's part of what we did. So we identified 16 data points, tracked farm activities and storage behavior, so that it enabled us create alternative credit scoring models that can unlock finance at scale. So the need for data-driven credit designs, it's important. Secondly, another thing we've seen and which has been emphasized by some of the speakers is the fact that mechanization as a service is very critical, because for smallholder farmers, ownership isn't sustainable. And so part of what we have done is use shared access models, right? Providing things like threshers and dryers to farmers and having them pay per use. And that improves efficiency, cuts down post-harvest losses. So mechanization as a service needs to be adopted. Thirdly, a lot of companies operate in a vacuum, and it's important that for the future we embrace partner ecosystems. Scaling is impossible alone. It's important to work with different organizations, financing institutions, cooperatives, equipment providers to craft and co-deliver finance, advisory, and mechanization at scale, especially considering that a lot of times, because of the lack of formal education of farmers, it's important to leverage an added layer of agents. Now, if you have an agent who delivers just one service, it may not be very economical for them compared to when the same agent is delivering multiple services. And that's why partner ecosystems are important. Fourthly, it's important to build up trust and adoption. Digital tools only work when farmers trust them. And so continuous education, the use of local agents, and demonstrable results build that trust. So in this context, you don't just tell farmers what works, you show them what works. And lastly, it is important that for every service that is deployed to farmers, there is a layer of advocacy for policy, because we need enabling policies, credit guarantees, data governance frameworks that will help to reduce risk and encourage broader participation. If we are able to, take advantage of these 5 things, we will be able to build the kind of Africa that we want. An Africa where the food system works for smallholder farmers and which in turn feeds itself and the world. Thank you.
Thank you so much, Amika. Those were really actionable insights that you've provided, and they really also, help the ecosystem enablers understand what are some of the key takeaways from somebody like you who's actually built up a startup into such a successful business now. So thank you for those insights. Moving forward, Pedro, let's bring this back to the investor role. How do you think financial institutions and agri-fintech startups collaborate to de-risk the investments in mechanization across Africa's agriculture value chain?
Well, if we think to give some examples, maybe we should keep this in mind. So, if you look at technology-wise, artificial intelligence allows a better risk analysis, machine learning and blockchain allows risk mitigation, and IoT basically allows a real-time analysis of data. Having said this, the kind of collaboration that I see and that is possible even to increase between financial institutions and Agri-Fintech, I can see 2 or 3 ways. I mean, you have partnerships, for example, by offering in the same package both credit facility as well as technical assistance for maintenance, for example. I can see opportunities for data sharing is already happening, right? Because you have several fintechs who have, like I said before, technology that allows, for example, analysis, like I said before, through satellite to follow up in real time what is happening in the field, which means that you can, by doing this, mitigate the risks of the financial institutions and therefore reducing the credit risk. You also have opportunities on the financial literacy. We must not forget that Africa still have a gap in terms of financial literacy, right? Which means that there is an opportunity also for collaboration in this area, because if fintech, if we have fintechs offering services of financial literacy to agricultures, right, improving namely the digital literacy of the agricultures, ultimately this will reduce the credit risk, because you'll end up with better managers, right? Even if they don't have that much of scholarship in many cases, at least they will represent to the credit institution a lower credit risk, because they have a better profile as managers to manage a farm or to manage any farming facility. And also from the side of the governments, right? I mean, the governments can help to improve all this collaboration between the banks or financial institutions and Agri-Fintech by subsidizing, by give tax benefits, or even through the public investment to support, for example, the literacy levels that I was talking about, or even to support innovation, that at the end of the day is what we are talking about when we discuss this, applying this kind of technology under this context. I cannot hear you.
Sorry, can you hear me now? Yeah, I'm so sorry. Can you hear me now? So I was just saying that was a really critical point that you've made, and also reducing investment risk can actually unlock real growth capital for Africa's farmers, as you've also mentioned, and the kind of points that you've made. So thank you for those actionable insights. Finally, Christopher, as a final thought from your end, what role do you see for blended finance and public-private partnerships in scaling the agri-fintech discussion and innovations across the continent? Christopher, are you there?
Thank you, Tanya. I think blended finance, or what you call private-public partnership, is very, very, very crucial, especially when you're addressing the financial needs of our customers. Few factors or few advantages of private-public partnerships. Number one is de-risking investment. And when we talk of de-risking investment, we speak of the actions like when the government provides credit guarantees to the commercial banks or credit guarantees to microfinance banks for them to give credit accessibility to farmers. That is one crucial way of unlocking private investment into the financial institutions held by the government. And that drives me to number 2 factor, which is to attract private capital. If you look at our sector, for example, in Kenya, agricultural sector, it is a very crucial sector because it contributes about 22% of GDP to the economy. And only 2 to 4% of direct credit is directed to this particular crucial sector. So you can see the kind of exclusivity and how the sector has really been neglected by the commercial institutions. Therefore, when we talk of unlocking private capital into public investment, we are speaking of impacting the very agricultural sector, which is very crucial in terms of creating food security and also creating good cash flows for the government. The other factor is bridging the financial gaps. I said one of the key way of helping the smallholder farmers is through investing through agtech and fintechs. These fintechs have shown the ability to bridge the gap of inclusion, and therefore what they lack is the capital to do that. So if we are able to partner between the public and the private, then we can bridge that gap, and we can have these fintechs and agtechs given enough cash flows to ensure that they impact smallholder farmers and also the marginalized. The other one is financial innovation or capacity building. For example, here in Kenya, we have partnered with AFDB Bank, and we are able to provide youth through a program called Enable Youth. We are able to give them loan facilities at 0 interest rate or a concession rate. And these facilities are agricultural related. You see, they create what we call decent employment to our youth. And that in doing that, they are addressing the issue of inclusion and also the credit accessibility. This particular project does not need any collateral. It doesn't need strong cash flows. What we've used is data-driven methods to ensure that we are able to appraise our youth and we are able to give them enough money to have very bankable proposals, to have very good structured agricultural projects, which they are able to implement very well. I also speak about financial accessibility and also creating inclusion. Without this partnership between the public and the private, then you cannot address this issue, because I have seen government development projects like eFund partner with the government, give money to financial institutions, and these financial institutions are able to escalate these affordable credit facilities to agricultural sector, and thereby impacting that very sector in a very big way. So I think if we are able to partner between private and public sector, we should be addressing pertinent issues that affect the agricultural sector here in Kenya and maybe beyond that, Africa and maybe region-wise. And therefore, we shall have created what we call food security. Thank you so much, Sanya.
Thank you so much, Christopher, for your final statements. And thank you all panelists for such an enriching and thought-provoking discussion. From affordable digital tools to innovations, financing, and farmer training, it is clear that the future of agriculture lies at the intersection of technology, finance, and collaboration. And to our audience today, if you've enjoyed this conversation, join us live in Nairobi for the 9th Africa Agri Expo on 11th and 12th February 2026. The venue is Kenyatta International Convention Center in Nairobi, Kenya. Together, let's continue the dialogue, forge new partnerships, and shape the future of Africa's agri value chain. Thank you once again to our wonderful panelists and all our viewers tuning in today. See you at the Expo. Thank you, everybody, and have a nice day.
Thank you very much.